target. Okay, good morning, everyone. Thank you for being here. We are joined by Cheryl Jones, who's Vice President of First Nonprofit Companies, who's a longtime partner of MNA, and she's here to talk to us about the ERC, employee retention credits, and how your organization, might have the opportunity to apply for these credits, and they can be pretty significant amounts that can, help support your mission. So this is going to be a fast, concise webinar, and so anyone who's watching the recording, feel free to reach out to us at M&A if you have questions, and we can put you in touch with Cheryl. And I will hand it over to you.
Thanks, Helen, and thanks everybody for joining me today. And it's going to be a brief, I call these briefenars and not webinars, because I can give you what you need to know in 20 minutes or less. So there's plenty of time for you to ask me questions at the end or contact me once this is over. So I'm going to explain to you what the employee retention credits are and just a little bit of background on First Nonprofits. The Montana Association of Nonprofits has been working with us since 2007. So we've had a long history of working together, but First Nonprofits was founded in 1978. We're based out of Chicago. We were founded by the United Ways, who were looking for ways to sort of help their member agencies save money on different programs and different insurance programs. And out of that, we sprung up with working with nonprofits to help them save money on their unemployment programs. And today we work with over 2,200 nonprofits representing over 650,000 employees nationwide. And we're really proud of the fact that the state of Montana actually recommends us to nonprofits to work with all of you on your unemployment program. So that's the basis of our relationship with the state association. And, we got into working with state associations, and here are just some of the state associations and the national groups that we work with across the country, just to bring value-added programs to the association so that they can bring that out to you. So one of the things that cropped up over the last year and a half was the Employee Retention Credit Program. And I think all of you have probably been bombarded and you hear the commercials about the Employee Retention Programs and what it is. And one of the reasons that we got into it is our members and our association partners came to us and just said, people are hearing about this retention credit program. We've talked about it. Can you just enlighten us and get into it? So I'm going to talk to you about the retention credit program. And it came out of hard lobbying by the National Council of Nonprofits, which, Montana Association is part of, going into Congress and say, listen, our members, and not just nonprofits, but employers, worked really hard to keep their employees on payroll and at quote unquote, their desks during COVID, even though, things had shut down and closed and everything else, and kept them and said, we're not going to lay our employees off. We're going to keep them working. We're going to do everything we can to keep people working during COVID. So as a result of the lobbying efforts and everything else that went on, the Employee Retention Program came out. So it's a tax credit that was enacted in 2020 to help employers, and first in 2020 and then in 2021, but to give employers some credit back for having kept their employees on payroll during COVID for 2020 and 2021. And it's unlike any other program because it's a refundable credit that comes back to you as an employer. It started in 2020, but then it was expanded into 2021, increasing the recovery amount. And I'll talk a bit about that on the next slide. So who qualifies? It's not just for nonprofits, it's for for-profit companies also. So it's for people that, support nonprofits. I helped an ARC of Los Angeles last week and they got a credit, and then they called me up and said, you know what, we do a lot of business with the little company down the street that makes all of our posters and everything else. Can you help them? Because they worked with us all through COVID. And I said, absolutely, we can help them. So it's for people that support nonprofits also, but it's for people like nonprofits like yourself whose operations were temporarily or permanently suspended due to government mandates. Or so if if you had to like suspend some of your programs, if you couldn't go into schools, you ran programs where you did after school programs, but because schools were shut down and you couldn't do your after school programs, that meant that you were suspended from doing what you had to do. So that counted. Or if because of that, your balance sheet was greatly reduced, that qualifies you for looking at the retention program. So as long as you continue to pay wages, and it's not just wages, if you continue to pay the healthcare cost of your employees, you're able to get credits back on those healthcare costs. So we'll talk about that also. So let's talk about the two differences. In 2020, when it was first enacted, the government said that your balance sheet for 2020, if you compared it to 2019, and it was a quarter by quarter comparison, if you were to look at 2019 quarter one, and then you had to look at 2019 quarter one, your balance sheet would have had to have a 50% reduction in order to qualify for that quarter. So it's a quarter by quarter comparison. So if your balance sheet for 2020 quarter one wasn't a 50% reduction, then you wouldn't have qualified for that quarter. Then you would move on to quarter two 2020 and compare that to quarter two 2019 and then quarter two 2020. Again, if that balance sheet hadn't dropped by 50%, you wouldn't be eligible. But if it did drop by 50%, then you would be eligible for quarter two. So it's each quarter. So you don't count yourself out if you're not eligible for one quarter. If you're eligible for the next quarter, then you're eligible for that quarter. So it's a quarter by quarter comparison that you're looking at. So you go by each quarter. So in 2020, only employers with 100 employees or less qualified. So what happened then, if you had a PPP loan, you're still eligible to apply for the employee retention credit. So a lot of people thought, oh, I got a PPP loan in 2020, I'm not eligible for the employee retention credit. That's not true. Even if you got a PPP loan, you're still eligible for the employee retention credit. The only difference is you can't double dip. So let's say you got a $100,000 PPP loan in 2020, but then as we go through and we look at your 2020 criteria, if you're eligible for a $150,000 employee retention credit, the only difference is that we have to back out $100,000 of the employee retention credit. You can't double dip on the employee retention credit. So if you got a $100,000 PPP loan, we back that out, and now you're only eligible for a $50,000 employee retention credit. So don't think if you got a PPP loan, you're not eligible for the employee retention credit. You're just not allowed to double dip. So we take that into account. Now, if you got a PPP loan and you didn't apply all of that PPP loan to salary, if you got that $100,000 PPP loan and you only use 75% of it to salary, then we only back out $75,000 of it for salary. If you use $25,000 of it to pay rent, or if you use $25,000 of it to pay rent, then we don't have to back that $25,000 out. So that's all the things that we sort of counsel you on when we look at that. So what happened in 2020, you were only allowed to get $5,000 per qualified employee. So when you hear that, you can get up to $26,000 per employee. In 2020, you were only eligible to get up to $5,000 per employee. So what happened in 2021 is it really changed the game. In 2021, you could claim up to 70% of the wages paid on your employees. And now when you looked at your balance sheet, you only had to see a drop from 2021 compared to 2019 of 20% on your balance sheet. So it became a lot easier to qualify for the ERC credits in 2021 if you're looking at your balance sheet. And then the other thing that happened is the government said, we will allow employers with up to 500 employees to apply for the credit. So it really, the larger nonprofits were able to apply for the credits moving into 2021. They wouldn't have been able to apply for 2020, but now in 2021, they could apply for the credit. So that was really a big game changer. And again, even if they had a PPP loan, they were able to apply. And now in 2021, you could qualify for up to $21,000 per employee, and that breaks down on a quarter-by-quarter basis. So you couldn't get $21,000 if you were only eligible to apply for one quarter in 2021. You can't get all $21,000 per employee. It's a $7,000 per quarter. So you have to understand it breaks down on a per quarter basis of how you get that money. So we can talk about that. So how do you qualify? So we talked about a business that needs to either temporary or permanent suspension of operations due to government mandates. So we all know that as of like March 13, 2020, that was like, you know, when true COVID hit and most governors declared that things had to close down. Restaurants had to close, school closed. So as things closed, that was like the first day of COVID when things shut down. So if your organization, you know, if you had a YMCA or if you had a Boys and Girls Club, you probably closed down and you didn't reopen for a period of time. So that was the government mandate of when you had to close down. And then when did they reopen? So that was a government mandate you had to shut down. So again, that's number one qualifier. But again, if you look at within your own organization, if you ran weatherization programs and you couldn't go into people's homes because of COVID and you couldn't do that service, you had a suspension within your own organization of having to do something. We have a lot of organizations, the courts closed down, they couldn't go into the courts. That was a suspension of operations within their own organizations. So that qualifies them. People couldn't go into hospitals if they were a victim services organization. They couldn't go into hospitals. They couldn't go into schools. So that's a suspension within their own organization of part of what they do. So think about within your own organization, did you have to suspend something or the duties of what you did within your own organization? Your balance sheet may not have had a loss, but your employees who typically ran or did that part of your operation, now were sitting at their desks, not being able to do what they did, but you kept them on your payroll. So that was a suspension of part of your operation, but you kept your employees. So think about that. So again, we look at the gross receipts. That's pretty easy for you to be able to look at that, your balance sheet. When you're looking at your balance sheet, if you've got a PPP loan, the PPP loan does not have to be calculated into your balance sheet. That's exempt from your balance sheet. So don't worry about calculating that into your balance sheet. You can't, we'll talk a little bit about what qualifies. So again, if there were supply chain interruptions, if you couldn't get what you needed in order to do what you had to do, that also comes into suspension of your operation. So you need to look at that. And again, if you continue to pay health care for your employees, you can get the credits back for the employer paid portion of that health care expense. You get that money back as part of that. Whoops, I may have gone one slide too fast. Let's just see. No, I didn't. I'm going to give you a case study of what happened. So we had a small nonprofit with 41 employees. They worked with visually impaired folks. They suspended their operation from March 16th through July 3rd, 2021. That was a very long suspension of what they did. They just weren't able to open. They did not apply for any PPP loans at all. They kept 5 of their staff in their office. They continued to pay their salaries, but did not pay for health care. They had a reduction in their gross receipts from one quarter of 2019. They had a loss. If you see, they had 200,007, and then the same quarter of 2020, it dropped to $54,000. The outcome is that they qualified for credits. They qualified because they were shut down, so they qualified for that. They qualified for credits for both 2020 and 2021. So what they saw is $227,000 back in the ERC credits. So that's an organization with 41 employees qualifying for credits in 2020 and 2021. Another one was a neighborhood revitalization organization with just 9 employees. So they had a 1-month shutdown in 2020. 2021, they had a 1-quarter loss of revenue compared to 2019. They had 2 PPP loans, one in each year, both were forgiven. So they kept all 9 of their staff on payroll. they paid healthcare for 2 calendar quarters that they recovered. And then we excluded the PPP amount from their wages that were greater than $10,000. So the outcome for them is that they qualified for 2 quarters in 2021 and got $104,000 in the ERC credits. So even the smallest of employers, given the circumstances of what went on in COVID, qualified for a substantial amount of money. So I think the surprising thing is what we're seeing is that even the smallest amount of employers qualify for the credits. And you know, my mantra in all of this, I've been working with nonprofits for over 25 years, is this is probably the last of the COVID money that you're going to get. So it's worthwhile just to go through this process, just so that at the end of the day, you're not wondering if you would have received any of this money. I mean, my thing is, if it's out there and if you're eligible, I don't want you to leave this money on the table. It's not that difficult of a process to find out if you're eligible, and it's not that difficult to file to get this money. So, you know, we'll help you go through this. We've partnered with Walton Management. They're out of New Jersey. They've been in the tax credit business for over 20 years. So that's all they do is they help qualify businesses to figure out if there's tax credits available to them. So they help track all the wages and the healthcare costs and determine whether or not you're eligible. And it's a simple process. It's a questionnaire that you fill out. I'm the only one that you work with on this. So it's not like you're working with 25 different other people. I'm your conduit to Walton. I'm the one that asks you all the questions and goes through all of this with you. So it's not like you're funneling through 25 different people to determine your eligibility on this. So a couple of frequently asked questions on this. Can you still apply for the credit? You can still apply. So, you know, you might get people telling you time's running out, time's running out. It's not running out. So for 2020, you can, for the 2020 credits, you have until the April 15th of 2024 to file for the credits for 2020. And you have until April 15th of 2025 to file for the 2021 credits. The thing that I will tell you is that you're sort of running out of time to claw back into 2019 to remember what went on and think about 2020, what went on within your organization. It's sort of the brain power is what we're running out. You know, I'm talking to organizations now, they're telling me, you know, some of the people that worked here in 2020 aren't here anymore. The people in 2019 aren't here anymore. So we're not sure what went on during COVID. Or somebody told me recently, my accountant passed away, so we don't really have, you know, the data that we should have to do this. So you're not running out of time statutorily. You might be running out of time thinking about going back into your books for 2019 or whatever to look at this. So just think about that when you're thinking about this. So how do you apply for the credits? You have to go through the IRS to get this. You have to file an amended 941X. So if you're familiar with filing your 941s, calendar quarter-wise, you file an amended 941X with the IRS to get your money back. So it's not that hard to do. You know, I walk you through it. I can't file it for you. We're not accountants, so you have to file the 941Xs on your own. I want to make that very clear that you file that paperwork, you send it to the IRS. How long does it take for you to get the money back from the IRS? Anecdotally, we're hearing, and it is taking up to 6 to 12 months for you to get that money back. So patience is a virtue. Once you file it, you get that money back. How does the ERC have to be paid back? It's a credit. It's like you and I filing our income tax at the, you know, April 15th is coming. We all have to file our income tax. If we're getting a refund from the IRS, it's just like that. You get to spend that money any way you want to spend it within your organization. It doesn't have to be allocated to any line item. If you get a $104,000 check, like the example I just showed previously, you get to use it any way you want within your organization. So it's that kind of money. It's unrestricted funds. You get to use it the way you want to use it. So think about that when you're wondering if any of this credit's coming back into your organization. It's for you to use the way you want to use it. We talked about your organization having a large PPP loan. The only restriction on the PPP loan is you can't double dip. So if you got that PPP loan, we're going to subtract it out of whatever eligible amount you might get from the retention credit. So again, if you're eligible for $200,000 in 2020 for the retention credit and you got a $100,000 PPP loan, you're only going to get a $100,000 retention credit. So it has to be subtracted out. As long as you use that PPP loan to cover salaries, we subtract it out because the ERC is a payback on the salary that you paid your employees for having kept them during COVID. And the PPP loan was also a salary-based loan. So as long as you use that PPP loan for salary, we have to subtract it out from the employee retention credit. So does the PPP forgiveness count as gross receipts? It does not. So when you're looking at your balance sheet, if you've got that $200,000 PPP loan, you do not have to count it as gross receipts when you're looking at your balance sheet for the retention credit and looking at the difference of how your balance sheet looked in 2019 compared to 2020. So if you got that $200,000 PPP loan in 2020, you don't have to count that $200,000 as gross receipts in 2020. So can your payroll company or whoever else, they can file that amended 941X for you. If they're going to charge you $500 or $600 to do it, I tell you that you can do it by yourself fairly simply. So don't if they're going to charge you $100 to $200 to do it, I would say that that's a reasonable cost. Otherwise, you can do that by yourself with my giving you some tips on how to do it. So it's pretty simple to file those 941Xs on your own. Our fee, what do we charge to do this? Our fee to do this process with you is whatever we charge you nothing up front to do all of the analysis and everything else. The only thing that we charge is if you're eligible for a credit, it's 10% of your credit, and that is not payable to us until you receive the money from the IRS. So upfront, until we tell you that you're eligible for a credit, there's no fee charged. So it's pretty worthwhile for you to go through the process for us to determine whether or not you're going to get a credit, because if you're not going to get a credit, there's no loss, no harm for you to have gone through this process. If you do get a credit, then the cost is 10% of that credit, and it's not payable until you get that money from the IRS. This link is not live as long as we're talking. So once we're done talking, if Lynn mails out this the PowerPoint to you, then you can go on this link. It's a simple, this is just a 3-question survey where it says, do you want our assistance in this process? And then what I will do is I'll email you like a 7-question questionnaire. And then it just walks you through. It's really simple. If you answer the first 3 questions no, it basically says you're not eligible for the ERC credit. So it says, did you have a loss in the calendar quarters that are either 20 or 50%? Did you have to shut down? No. Did you have to do this? If you answer the first 3 questions no, then it pretty much, takes you out of the running for the ERC. If you don't answer, then it just asks you a few more qualifying questions so that we can get you to the next step in the process. So that is my briefinar in less than 25 minutes. So there's probably some questions in the chat if we want to open it up, or we can unmute everybody and people can just ask the questions, Tyler, if we want to do it that way.
Yeah, Cheryl. So I did put the survey link in chat for folks. And
Great.
we do have some questions. So the first one is, how are nonprofits that are primarily federally funded impacted by this? If
So that's
federally funded,
yeah,
do we still qualify?
So that's a great question. So if you're federally funded, and if the federal funds that you get specifically say that, those funds have to be allocated to salary. So like community action partnerships or Head Start say that those funds are salary allocated, you have to back out those salary allocated dollars. Because like Head Start specifically say, if you're awarded ERC dollars, you have to give that money back to Head Start. So like I just had a community action partnership that, you know, had they not backed out the federally funded money, would have got a $5 million ERC refund. But once we go back and we back out all of the federally allocated salary money, it's going to be a very different story. So that's the only thing. You have to back out the federally allocated salary dollars if it's specific. Now, if you get federal money and it doesn't say that that money has to be allocated to salary, then you don't have to back anything out.
Great, thank you. The next question was, if we had to suspend fundraising activity, how would that suspension be a part of the puzzle?
So if in 2019 you had a fundraiser, if your typical fundraising year, you averaged, you know, $150,000, $200,000 in fundraising, then you can say that you typically would average that much. So you can say that your typical loss would have been $200,000 in fundraising. So.
Okay. And the next question is, we are a theater that received a small PPP loan that was forgiven, but we also received a federal shuttered venue grant. How do you accommodate for other grants?
Yeah, that's okay. So any money that you receive then goes, so that grant then has to go to your balance sheet.
Okay. And then do we subtract the PPP only in the quarters we used it or received it?
The PPP, yeah, so the salary, so we will back out that PPP salary on your behalf. So you just have to, so in my longer questionnaire that I send you, we're going to ask you for the PPP amount for the year that it's there. So if you used it, if you paid, you can either back it out of the gross wages when we ask you gross wages, or we'll back it out based on that. So we'll take that all into account.
Okay. Does anyone else have any questions right now? If so, feel free to come off mute, but that's all of them in the chat at the moment.
And I'm always available via email or phone to answer any questions you have. And once you see the questionnaire, or you can just email me for the longer questionnaire and just avoid the short questionnaire, because the short questionnaire is just going to trigger me to send you a long questionnaire. So your choice.
Okay, I'm just going to put Cheryl's email into chat right now just for the folks who are on, and then I'll include your contact information when I send out the recording to everyone who registered. But so for everyone on, thank you for joining us. Please do reach out to Cheryl if you have questions. I know, some of our members have done this, they've pursued it, and others have not. And this is I think a great opportunity to try to get this credit if you are eligible. So if anyone has questions, I think this is your last chance. Otherwise, please do email Cheryl. Thank you so much for being on.
Thanks, everyone.
Okay. See ya.
Bye-bye.